Temperatures are beginning to drop into the 30s. Our fall weather also reminds us that economically speaking, it's time for third quarter earnings to be released. This is an important set of data, especially now, to assess the current run rate of the economy, the strength of hiring plans, and what might be coming in 2014. It's a time of much uncertainty, and to provide perspective, we're joined by U.S. Bank Senior Equity Strategist Jim Russell for our U.S. Bank Economic 360. Jim, good to have you with us.
Good morning, sir.
So we're expecting these third quarter earnings reports. What do you see as the trend?
We see a little bit more of the same, Brian. We've been stair-stepping down in terms of the growth rate really for several quarters now. The third quarter, I think, will show only about a 3% growth rate in terms of third quarter this year versus third quarter last year. Now, in terms of the annual earnings progression, what you see on the screen is the 2012 numbers, the 2013 numbers, which again are a little bit of an estimate. These are the consensus estimates by Wall Street listed here. Our U.S. Bank Wealth Management believes that number for 2013 will be about $110 per share, and an early look into 2014 as well. Again, the consensus numbers at $122 per share. We think that maybe $118, $119 per share is more likely, but the progression this year at 5.6%, 2012, 2013. Next year's is a little higher at 11%. It also shows you that even with weak earnings, the stock market can continue to move forward up over 20% at this point.
Are there areas where we'll see weaker and stronger earnings trends, and why would that be?
Yeah, we think so. We think that in terms of the third quarter specifically, telecom like AT&T or consumer discretionary companies like Macy's will continue to lead the pack. Now, what we see on the screen here is that, frankly, the smaller the company, the stronger the earnings growth. And we think that is because, frankly, as weak as the economic environment is here in the United States, small companies do most of their business here domestically. And what we're seeing is, frankly, that Europe remains a little bit problematic for the larger companies out there, really producing a much weaker earnings growth profile. So the smaller the company, the stronger the earnings growth here in the third quarter.
The government's up and running again, but the shutdown certainly had some impact on the economy. Do you see that as critical, and what do you see as we look ahead to 2014?
Yeah, that is a great question. We do think that the fourth quarter will reflect a little bit of the first few weeks here in October in terms of the government shutdown. Probably takes about a half percentage point off of fourth quarter GDP growth rates. Probably takes it from 2 to about 1.5% or so. We'll have to see how things play out. We do think that 2014 will have a different kind of tone and tenor to it in terms of earnings. We think that that hiring plans will be much more robust from the private sector next year, meaning job growth for the United States, here in Ohio, here in Cincinnati. And secondly, we think the foreign markets start to actually resonate in terms of growth. We're going to see a little bit better tone and tenor from both Europe and China there, as well as the United States. So we think that things move forward as we move into 2014.
Jobs are key. That looks optimistic.
That's good news.
Thank you, Jim. We appreciate you and U.S. Bank.
Thank you.